Stocks, bonds, ETFs, straight out of downtown Chicago. This is Zach's Market Edge.
Welcome to Zach's Market Edge, the podcast about investing in your life. I'm your host, Tracey Ryniec, and this week I'm joined by Zach's stock strategist, Bolan, who is also editor of the Game Changers portfolio and Stocks Under 10. And we're going to discuss a topic that has been in the news a lot the last couple of days, and I know it's of interest to both Brian and myself, and that is Warren Buffett. He held the annual Berkshire meeting in Omaha, the big pilgrimage when everyone goes to the heartland from the coast, and, gets to see him and Charlie Munger up on the stage for hours answering questions.
The exalted lords that they are.
That's right. Warren is now 85. I don't know how old Charlie is. He's
385.
Yeah, he's about 90, I think. And then they were on CNBC for several hours the next day. They always do that afterwards. Yes, several hours with Bill Gates. They have to bring him on, maybe to spice it up. I don't know.
What was Becky wearing?
She's the normal.
Okay,
she had
normal.
black with the
good.
skirt. Yeah. Becky's always there. Becky Quick from CNBC, and I did watch some of that. I didn't attend the Berkshire Hathaway meeting. I'm not a shareholder. I used to be, but I sold those shares years ago because they were going nowhere. Yeah.
Right. Oh.
Although I did look it up lately, and just out of curiosity to see how well they've been doing, and the B shares, which is what the lowlier people can afford,
the plebes,
right? Those are up 81% over the last 5 years, comparing to the S&P 500, which is up 53.9. So they are beating the S&P these days, but you get no dividend there.
No divvy. Oh,
that always annoyed me.
I think that's kind of the thing, I don't want to jump the gun on everything that we're going to talk about here, but I think that's like the whole strategy that Mr. Buffett would need, and the thing that he gives to everybody that makes it available for the common person, that $1,000 price, share thing, has no dividend, is the absolute thing that built him, but no, not for you.
Well, yeah, that's the interesting thing. On the parts I did see them discussing, of course, they talked about their holdings, which are, IBM, Wells Fargo, American Express, he's held for like 30 or 40 years, Coca-Cola. They all pay dividends. And they were talking about IBM. Oh, it's got that dividend. It's now 3.7% yield. Great. That's what I'm getting for owning Berkshire. I'm getting this, these big cap, slow growth. I looked up IBM's, earnings expected to decline 9% this year and up only 3% next year. They kept going on about, the dividend. And for Buffett, who bought some of these, like I said, 30 or 40 years ago, he's getting a big dividend yield off of those original purchases.
Right.
But I know everybody listens to Mr. Buffett and to some extent Mr. Munger. I have in the past. I've read articles. I've read books about Warren Buffett and his investing strategies, which I still.
Oh, gee shucks.
I know. I still like some of what he says about the long-term investment, but his actual investing picks now, I don't think anyone should be listening to, I don't think I should be running out and buying IBM or American Express.
Yeah, I think I'm going to go ahead and launch it right here.
Okay.
Tracey, I've been waiting for some time, for so many years, but Warren Buffett has been the scourge of the investment world for so many people for decades.
I know.
It's an absolute con job that the American public has just bought in, hook, line, sinker, rod, reel, boat, the whole lake. They've bought the whole thing. What everyone has done is say, let's act and have Warren Buffett be our role model. But the fact is that, Warren, did it in a different time. And what he did, over his time, he did great.
Right.
Okay. And I'm not taking away from the success that he had, but you can't model yourself to do what he did today. The one thing that has been constant in the stock market for the last, 100 years is constant change. So the things that work for him will not likely work for you. And his whole philosophy of, buy and hold forever, I think we've summarily dismissed that as something that just can't happen over the last, even 8 years. You can't buy and hold forever and expect that these names, of today are going to be around even 15 or 20 years later. I mean, it's just highly unlikely. The thing is, it worked for him in his time, and I'll go into some of the even more negative feelings that I have for him. But you can't model yourself after Warren Buffett, thinking like, okay, this guy just knows everything because at one time he did really well, and great for that. But that one time is now over, and taking that philosophy and extending it through to the present day just does not work.
I feel like we should be modeling him as he was in like the 70s, and the type of companies he bought them, because Berkshire was much smaller. When he has less to invest, he's able to buy the smaller, more nimble companies. He doesn't have to buy these, really large cap, old whatever. Because it's so much smaller. So I do feel like I can take some of what his philosophy is from back then and apply it to today, but not follow his philosophy from today.
Right. Okay. So that
makes any sense.
I know. I get you with that. But here's one thing. So I just want to, I made a few notes here this fits in perfect here because over the weekend, Mr. Buffett had tough words for Mr. Michael Pearson, who was the CEO of Valiant, VRX, and that stock was $277, and now it's it was down to 27 recently. So 90% haircut there.
Yeah.
Normally haircuts aren't as big as 90%, but I mean that's very hard. But let's take a look at Berkshire versus VRX. I mean they're both essentially the same thing. They're roll-ups. They're buying businesses. That's what they do.
Big
That's how they're just. Valiant's buying up all the biotechs and healthcare companies, all these things. And the idea of a roll-up works great as long as it's working. And for that to happen, the stock has to keep going up and earnings have to continue. You continue to use your stock as your currency, that sort of thing. And that's great when it works. And it's been working for Berkshire. If you think about the businesses they have, the Geico, the insurance.
See's Candy.
Yeah,
Dairy Queen.
Well, See's Candy and Dairy Queen a little smaller, but think about the railroads.
Right. They bought
utilities.
Huge railroad.
Yeah. These businesses he's just rolling these all up into one big pile. And it's like, and I get the idea of the vertical integration between, the railroads and the utilities and a little bit on the insurance side and things like that. And there's opportunities in and around there and the other items that they hold. But at the end of the day, it's a roll up.
It is.
And just because Berkshire
That's why I sold it.
Yeah. Just because Valiant, had pricing power and they, really squeezed everything and they possibly pushed everything higher in terms of prices and really made a lot of money doing that in a very short amount of time, doesn't mean that, that their roll-up is bad and your roll-up is good.
Right.
So when we're talking about like the acquisitions that a young Buffett would make and you look at it today, wasn't Michael Pearson basically a young Buffett? He's just buying big names. He's buying billion-dollar companies. If you just dial it down to buy the $200 million companies instead, you're doing the exact same thing. And I guess my idea here, or my point in general, is that you can't do the Warren Buffett strategy because it worked for him at the time. It did, but now it doesn't work like that anymore.
Okay.
You don't see Facebook and let's call Mark Zuckerberg, one of the great investors, if you will, of the time. You don't see him just constantly out there buying big, huge monster names. I mean, you did buy the Instagram and you did buy the WhatsApp, but we haven't heard anything of a mega huge acquisition from them in a long time. So it's not necessarily all about the roll up, all about buying and slapping parts on to make something better.
What do you think about when Buffett's always asked at these meetings and on these interviews about his views on the economy in general? Do you think he has any idea about what's happening out there? Because I bring this up because a lot of people were quoting over the weekend. He got asked about the housing market because Berkshire does own some home builders and things like that. And he said, quote, "I don't see a nationwide bubble in real estate at all," unquote. But in 2010, I looked this up because I wondered what he thought about the last bubble we had. Did he call that one? Right. Did he see it at all? And I looked it up, and he actually gave testimony before the Financial Crisis Inquiry Commission in New York City. This was in June 2010 about the bubbles because of his investments in Wells Fargo and all of that. And he basically missed the housing bubble the last time. And he said, quote, "I didn't think home prices could pop like they did," unquote. And then he also admitted that he basically not missed, but miscalled the internet bubble of the 1990s, saying that it went further along than he thought it would. So I'm reading all this going, why are we listening to him talk about how there's no bubble at all nationwide about the housing market? Why is this the big headline when he's never gotten that thing right ever?
Yeah, you can give him a little bit of credit for being, sticking with it, sticking in the market for as long as he has and holding these investments for a very long time. The buy and hold part, of that philosophy, the hardest part of buy and hold is holding.
That's right.
Because you want to take those gains, you want to go after something sexy and beat your number from the other year. But if you just hold on for decades,
right?
Because let's
that
face
is his philosophy.
A lot of people do have decades left to live. It's
right.
just a lot of people don't use decades in their time horizon for their investments.
Right.
If you did that,
should we all?
Yes and no.
Okay.
To some degree, obviously, in your large cap ideas, maybe decades, are the things that work. But in the smaller cap, the things that you want to see good explosive growth in the near term, certainly not.
Yeah.
Will Facebook be around for decades? I don't know. Will Twitter be around for decades? We're hitting, all-time lows right here. It is something that we thought was destined for greatness.
Right.
Totally wrong. So who knows what the right thing is? Only hindsight tells you.
He tends to like companies that have like really strong brands, consumer oriented, things that he does believe will be around for decades, like the Dairy Queens of the world. They are still here. Do you see any, companies now that, investors who don't really want to follow what Warren's doing with the IBMs of the world, but kind of want to follow that other philosophy of his about picking the brands, is there anything on your horizon that would kind of fit in there?
I'm against Warren Buffett in almost everything that he does.
Okay, so you don't even follow that philosophy.
The only thing that I agree with Warren Buffett is breathe oxygen. And other than that, I think everything that he does is wrong and evil.
Okay.
I'm a little taking maybe a little bit of a hyperbole there, but
so you will not be attending. You will not be watching the Omaha meetings because I think they live.
Yeah.
Had it on live this time, live streaming.
Yeah, I won't ever watch it. Him and him talking of the weapons of financial mass destruction.
Yeah.
And it was 100% a case of don't you use this and don't you do that. But in behind the scenes, he's doing all of that and using all of that. So it's the old do as I say, don't do as I do. And then I don't even want to get into this maybe for another day, the podcast for Warren, but him in the mobile homes business,
right?
Which is just the most financial predatory thing in the world, and that is basically all him, and almost nobody else. So, and from soup to nuts, from the home manufacturing to the loans to the insurance to every aspect of it, he has his filthy fingers in that pie. And I know that the American dream has been bought and sold to everybody for a very long time. You have to own, but the mobile home industry is just an absolute, tar pit of destruction of wealth for everyone except for Warren Buffett, who has made
the manufacturers
untold billions from that. So I everything that he's about, I'm against. That said, I understand the power of dividends over decades.
Right.
So if you have the decade time horizon and you want that large cap name, go with the dividend payers. The things that Johnson & Johnson is definitely not going to go away over the next 20 years.
Right.
I don't know what dividend they pay. I'm sure that they pay a minor one.
Yeah.
Reinvest those dividends. And over a 20-year time horizon, I would imagine you're going to be just fine. If you have 20 years.
Yeah, I saw
to invest,
exactly.
Time horizon to get your money out to be able to retire on.
Yeah, I saw a tweet that said, and I don't know if this is accurate, but it sounded pretty good to me that because he's owned American Express so long, that original dividend is now returning something like 400% or something because he bought it at like 30 cents a share way back in the 70s.
So when you've made all this money on your money, it doesn't make sense to even sell it at that point. And then it's what else would you do would give you what kind of return as compared to what you have. And when you have that multi-decade philosophy, that can work. But again, you get into that hard part of that equation. The holding is the hardest part of buy and hold.
That's right.
Other stock, if you were anti-Warren Buffett, you would look at these companies that are doing the disintermediation, these things that are breaking down the brands, the things that are destroying the financials. We saw
the game changer type
philosophy. We're going to shake up the world here, and this is going to be a lot different.
So would that be like because he likes the banks and the big financials, so that would be like maybe these little lending companies. Do you have any picks in there?
One of them blew up today for the most part. On Deck Capital, ONDC, is down some 35%. After doing earnings. Lending Club is one that's in that same vein. I'm more negative on that one now, just because that whole specter is going to be painted with a broad brush right here off of the ONDC.
Something to keep on the radar.
Yeah, something to keep on the radar down the road. But just the idea, the disintermediation that's happening. Is Uber the type of thing that Warren Buffett would invest in? And most likely not.
No.
Because it's a small service and it's worldwide and it's little tiny little bits. But that's the type of thing that excites me. I like the Uber. I like that idea.
I did see questions asked of him and Charlie Munger about the autonomous car because they own Geico and the big car insurance. Mm-hmm. But if we have self-driving cars, you might not need car insurance at that point.
Right.
So what does that mean? And Charlie Munger had kind of a response to that. He said, they're okay with owning some of the companies that might be disrupted, I guess is the word you would use, because it will take years to disrupt. But in their earlier years, they used to own an encyclopedia company that made a ton of money for them. This is like way back in the day. And then Bill Gates, when Microsoft came out, they offered that free encyclopedia on their software. I don't know if you remember that. Like you could click on it. It was before the internet really, but it was embedded in there. Yeah, exactly. And that basically started the crushing of the encyclopedia business, and then the internet really crushed it down. So he used that as an example. See, we survived that. But he didn't really give any kind of, Geico's a little bit different than a smaller.
Did they really survive that?
I think he said it was like $50 million business. Like Geico is huge.
Right.
So there is no real answer about what happens if insurance companies. So there is still a danger to some of these businesses.
And clearly, does Charlie Munger fully understand the adoption rate that people are going to have on these things and the demand consumers are going to have at one point for these self-driving vehicles? Right. I mean, I know that makes these super long trips incredibly worthwhile. Like say if I'm driving from Chicago to Cleveland or to St. Louis or something like that, or Cincinnati, I've got 5 hours on the road. And if I have an autonomous driving car, I can get a lot of stuff done over that time. And basically,
I don't need to take the Greyhound either, depending on the cost. Or Amtrak.
Maybe Amtrak. Maybe some airlines get hurt on the long run trips or the short run trips for the airlines. But at the end of the day, when the consumers start demanding these things, that's in watching markets over the years, you hear the billionaires talk, and one of the very smartest billionaires that I saw said, they don't invest because because prices are low or because of location. That isn't it. Like in real estate, it isn't location. It's timing, and we invest and do something if there's demand. And when there's demand, you can take advantage of things. You can give that product, and then you can have pricing power along the way as you refine it and build it better. So when there is substantial demand, that's when things are going to change. And when you see that these types of products can come out on reasonable prices and have this sort of thing where you could, I could basically live in Cleveland and commute to Zach's and get work done, or maybe not that far.
Well,
but
that's a little
extreme. But I could be there, every other weekend.
In Milwaukee.
Yeah, I could easily be in Milwaukee or someplace, deep into Wisconsin.
Right.
And have a lot of space and enjoy life a little bit differently.
Right.
That sort of thing will drive demand. And, does Charlie or Warren fully grasp that, and how quickly things change today as opposed to how they have over the last, 15, 20 years?
Okay. Do you have the ticker for On Deck Capital?
ONDK.
Okay.
Pretty sure is On Deck.
What about Lending Club?
Lending Club is LC.
Okay. And I had a couple of picks that are kind of in the Buffett strain. These aren't the disruptors necessarily, but a couple that people might be interested in that aren't the big caps if they're going to stay away from those big dividend players. I like Amplify Brands. Their ticker is BETR. They just reported the Nobody likes their report, but they make Skinny Pop popcorn. Everybody knows that brand. I've even started eating it. It's like the healthy snack food. That's the in thing now.
When you open it, it does smell like you've just you've walked into a movie theater.
I know.
It smells incredible, and you think like they had already popped popcorn.
Right? Like how could that be good?
I don't really want that, right? Because that's got to be stale sitting in that bag, and I can just get the microwave stuff, and it's right there. But I burn the microwave stuff, so I don't know. The popcorn. It's always been a mystery to me, but obviously, that it's doing well. I see the one thing that I see about BETR is that I see sequential revenue growth for them throughout the year.
Yeah,
and in terms of aggressive growth, that's something that I always look for. That's my kind of first litmus test. If I see that, there's a good chance that earnings will continue to grow along with sequential revenue growth. So they have it. I've looked at the numbers for the analyst models, and to me, the whole thing looks good. I think the report was okay.
Yeah, me too.
Little light on gross margins, but for the most part, it was in line with what the street wanted. But there's a lot of whispers out there that they were going to beat.
Right,
and I think that's
there was a lot built in.
Kind of the problem there.
Okay. Another one that I like that's on the financial side, I'm staying away from those big mega cap banks, but I do like the regional banks, and I really like the Bank of the Ozarks. It's in Arkansas. They have about a $3.6 billion market cap. They do pay a dividend, 1.5%. They're kind of staying away from the oil and gas debacle so far. They're, more focused on the Atlanta region and over there, so they didn't get hung up in as many of the bad loans. So they already reported earnings were good again. They haven't missed in 5 years.
That's good, small conservative banks. And a shout out to Todd Bunton, who goes to the Ozarks.
That's right. He loves it down there. I always tell him, did you go to the Bank of the Ozarks? And he looks at me like I'm crazy.
Vacations in the Ozarks, where I don't think the Bank of the Ozarks serves anything in the Ozarks.
No, it does.
That's in Missouri, isn't it?
No, it's in Arkansas. No, they're in Arkansas.
See, my geography grades were
no one here
D's
knows
and F's.
anything. Yeah.
I took them to mean doing fine.
Yeah. And another one that I like is Snap-on. Their ticker is SNA. And they've been in business since the 1930s, Wisconsin-based, so good Midwest company. They make power tools and like diagnostic tools and all that stuff for the auto industry. So if you own an auto shop and you need to have any kind of tool to fix the car and all of that.
Right.
They do all that. They do some health and medical tools too, I believe.
Dave Bartosiak, you're probably dreaming
That's right.
about
He would love
buying this
it.
stuff.
He would love Snap-on. They also haven't missed in 5 years. I like those kind of companies. They have a $9 billion market cap, so they're a little bit bigger than some of these others.
And speaking of 5 years, that's how long Eric Dutram has worked here. Now, I've talked to
oh my
Todd,
gosh.
Dave, Eric, and Jeremy.
Yes.
I'm just going to throw him in there. And Nina. And Kevin.
What about
so now,
yeah.
Kevin, there we go.
Okay.
I've got everybody.
You've mentioned everyone who's
Everyone
here.
gets a shout out.
Okay, that's nice. You can read all of these people's articles on Zacks.com. You can also listen to our other podcasts on SoundCloud.com and on iTunes. I guess we had a little bit of snafu on iTunes. We weren't showing up there for some reason or something. That's been fixed. No, don't panic.
Sweet,
we are still
panicking.
on iTunes. We're on the Echo, whatever that one is. I forget. But if you're on the Echo, try to summon us on it. I guess no one's been able to figure it out yet. Like, tune in. I've been told by Danny here. It's on TuneIn. So try to summon us and send me a tweet if it works, because I'm not sure what's happening.
Like Terry Ruffalo, where people are talking about new technologies, and I'm just going, tune in.
Yeah.
Then tune into our podcast.
I don't think we're on Google Play yet, are we? Are we on Google Play? I don't think so. We're going to try to get on there.
We're
so anyone
expanding
with
our
Android,
boundaries.
yeah. I have an Android, so I want to listen to myself occasionally. So we'll try to get on Google Play.
Oh, boy, Tracey, that's a loaded statement right there.
Yes. So we have all these sources. Listen to all our podcasts on there. There's some great information, and our articles are also, as I said, on Zacks.com. So check us out, and we'll see you again next week.